Alright, this is the market review, a screen print of my charts for August 11th. Over the just about the first hour of the market, we can see it's going from 9:30 when the market opened to about 10:40. Right actually at 10:40 is a pretty good trade. The one thing about this screen print is I'm not showing the lower indicators. That was unintentional, but I'm just going off of this print right now. And you can compare to your own chart if you need to from the trades that I took and the lower indicators that show those TCs we want. Just briefly, I wanted to show you, and actually you can see where my trades were in conjunction with my stop loss, my profit target, still on my chart, because the charts I'm using are recording my trades right onto the chart. Now, the first trade I made was this one, obviously here, and the way I took it, this is a 2-minute chart. I saw the market push down significantly, breaking this support, and then it did a slingshot. It sucked back as if it was changing directions, and right before the candle closed, there was a lot of momentum taking it back down. Now, on a 1-minute chart, this would have been a stair step, but a 2-minute, I actually just placed my order right there and let it fill for 5 ticks. That's all I took off of that. Those type of trades, I'm just going for a little piece. But that was 10% on margin. The next trade I took was right here, and it was in the middle of a whole bunch of congestion happening. This was a Fed day and a lot of congestion happening into it. But if you look at, I wish we could replay this a little bit to kind of show you why. This was another slingshot type of trade. The MACD was still in a downward position. The indicators here are still in a downward position, so we're only looking to go short or staying out of the market. And we had, again, as this peaked out here, it was not giving us the TC we wanted for this slope, but at this point I was going for a lower high here because this came back and then created another slingshot. I placed my order here. It ran 4 ticks and then turned around on me, but I had moved my stop loss to break even. So you can see both of those little arrows. If you zoom in far enough, you got a red and a blue. You can see my sell order and my buy order at the same place. So I broke even on that trade. So I'm still up 5 ticks. The market's still pretty congested, and I'm just not seeing a very good signal. I want to make sure that that it's going to break out of this range we're in right here. And that's where I took this trade right here going short. Now you can see my stop loss was clear up here, but I had done some adjusting with it. I did a sell order here and filled at one point going short right there. So that was as it was breaking this support. And then I tried one more trade off of this little stair step. We have a little blue candle here and a red candle, and I took it just as it was breaking this mini resistance level, or excuse me, support level, like a Steve Fairchild trade that I've talked about before. And simply it was during the king candle, not after the king candle. I took the entry there, and it ran a little bit my way, just came shy of filling at my 5-tick profit target, and then turned around on me, and I got sucked out for 4 ticks. So if you look at these trades, I made I made 5 there, 0 here, 10 here, -4 here. So not that bad of a day all in all, but still, you know, quite different than what we normally see. If you are able to, you can look at this, and if you were able to just get 1 or 2 small little trades like this and this each day, it shouldn't be that difficult to average 10% on your margin each day. I think that's a very conservative number. So if you have any questions, let me know, and see you next time.